Okay, dear students, let's start another live revision class for the session March 25 taxation. We have started our revision from the topic that is income tax calculation. So let me just write one question, and then after doing this question, we'll be discussing more rules of the income tax. Employment income, which is a non-saving income, is 80,000. Saving income means simply interest income, which is 50. And dividend income is 20,000. There's no other information. We are required to calculate income tax liability. Obviously, first we have to tax the non-saving income. Let me make the columns. Non-saving income. After that, saving income. Dividend income and total. Employment income is a non-saving income, which is 80,000. Saving is 50. Dividend is 20. So total we are getting 1,50,000. There is no gross personal pension contribution in the question. It means that if you just check your ANI, adjusted net income, how do we calculate ANI? Simply net income. Let me write here also. Tax live revision. March 25. Net income. From this net income, we deduct gross PPC. We also deduct gross gift aid donation. If adjusted net income is more than 1 lakh, then personal allowance will be reduced. Personal allowance is 12,570 less adjusted net income minus 100,000, then into 50% of 1/2, it's the same thing. But personal allowance will only reduce when adjusted net income is more than 1 lakh. Another thing is, if adjusted net income is more than greater to 1,25,140, then your personal allowance becomes zero. If adjusted net income is 1,25,140 or more, then simply personal allowance becomes zero. Now, if you look at this total income, so here in this question, actually what is happening? Adjusted net income. Net income is 1,50,000. There is no gross PPC, there is no gross gift aid donation. It means that simply what is happening over here, ANI is more than 125,140. Therefore, personal allowance becomes zero. So we are not getting any personal allowance. So there is no personal allowance. Why there is no personal allowance? Because adjusted net income is more than 1,25,140. Okay. Oh, this is your taxable income. Obviously, first we have to tax our non-saving income. Income tax liability. Basic rate. 37,700 for the non-saving into 20%. It gives us 7,540. Okay, now from this 80,000, we will deduct 37,700. Whatever comes that falls in higher rate band. 80,000 minus 37,700. I'm getting 42,300. So logically, this 42,300 falls in high rate. 42,300. Applicable tax rate is 40%. 16,920. Now we'll go for saving income. But in case of saving income, we need to check individual's tax paying status for the nil rate band. Look at this, the total taxable income. Individual's tax paying status is always decided on the basis of total taxable income. Can I say the total taxable income is more than 1,25,140? So this individual is an additional rate taxpayer. Can I say whoever is an additional rate taxpayer will not get nil rate band for the saving income? Is this clear to everyone? This individual is an additional rate taxpayer. That is why this individual is not getting any nil rate band for the saving income. Please reply in the chat box. Is this clear? For the saving income, no nil rate band. Okay, now. Now let us check how much space do we have in our higher rate band. The limit of the higher rate band is 1,25,140 minus 37,700. How much we can tax in higher rate band? 1,25,140 minus 37,700. I'm getting 87,440. So the maximum amount which can fall in higher rate band, that is 87,440. Now out of this 87,440, how much we have already utilized? Can I say we have already utilized 42,300? So how much space is left? Still we have 45,140. So in high rate band, we still have 45,140. Higher rate, this time saving income. And that is 45,140. Applicable tax rate is 40%. 18,056. So now high rate band is completed. Now obviously additional rate band. Out of 50,000 saving income, 45,140. We have taken that in high rate. So obviously the remaining income falls in additional rate where applicable tax rate is 45%. From 50,000, I will deduct 45,140. I'm getting 4,860. Applicable tax rate is 45%. Now we'll move towards dividend income. Can I say in case of dividend income, every individual, irrespective of tax paying status, every individual gets the nil rate band of 1,000. Remaining 19,000 from the dividend income obviously falls in additional rate, and dividend income additional rate is 39.35%. $19,335. I'm getting 7,476.5. So make it 7,477. So here comes your income tax liability. 7,540 plus 16,920 plus 18056 plus 2,187 plus 7,477. We are getting 52,180 income tax liability. Please, student, reply on this in the chat box. Is this clear? The entire calculation. Income tax liability calculation is clear to everyone? Okay, it's clear. Great. Let's say we have employment income 90,000. Gross personal pension contribution is 20. Required income tax liability. Please quickly calculate, everyone. Employment income is a non-saving income. So we have to deduct the personal allowance. 12,570. 90,000 minus 12,570. Taxable income is 77,430. Now, can I say due to gross PPC, basic and higher rate band limit will increase? Normally, basic rate is 37,700 now. It will increase by 20,000 gross PPC. High rate band ends at 1,25,140, but it will be increased by gross PPC. So 37,700 plus 20,000. Basic rate limit is now 57,700. Income tax liability. Obviously, basic rate, which is now 57,700, 20% of that. I'm getting 11,540. Now from 77,430, we'll deduct 57,700. Obviously, whatever comes falls in high rate. 77,430 minus 57,700. I'm getting 19,730. Into 40%, that is 7,892. So 19,432. Students, where did you make the mistake? Can you please tell me that exactly? I think you people have not increased the bands, or is there any other reason? Please, can you tell me? What is the reason of getting the different result? Oh, why did you multiply? No, 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 no. Please look at this. What is written, students? Gross PPC. When nothing is mentioned, then the PPC is net. Then you have to gross it up. When the question itself says gross PPC, I hope it is clear now. So further grossing up, there's no concept. Okay. Just one more question. Let's say the employment income is 10,000. Saving income is 25. Dividend income is 5,000. Please, I want everyone to try to calculate income tax liability so that we can slowly and gradually start our main topic of the revision. Right now, we are just revising the basic income tax calculations. Please attempt this. Okay, so let's try together now. Non-saving income, total. Obviously, employment income is a non-saving income just for the sake of doing quick. I'm just writing directly 10,000 non-saving. Saving is 25. Dividend income is 5. Becomes 40 total. Personal allowance is 12,570. 10,000 is deducted from the non-saving. Remaining will be deducted from saving 2570. Taxable income 25,000 minus 2570. 27,430. So non-saving income taxable is 0. So we will now start from the saving income. Can I say since taxable income in the column of non-saving it is 0, so the entire starting rate band 5,000 is available for the saving income. Starting rate band saving income which is 5,000 into 0% is 0. In addition to starting rate band, obviously this individual will get nil rate band for the saving income as well, and this individual is a basic rate taxpayer because look at the total taxable income. Can I say the total taxable income is 27,430, which is in fact lower than the basic rate band limit. So this individual is a basic rate taxpayer. Whoever is a basic rate taxpayer gets nil rate band for the saving income £1,000. Okay. So from 22,430, which is your tax saving income, out of this 22,430, 5,000 we have taken in starting rate band, 1,000 in nil rate band. So 22,430 minus 6,000. The remaining amount is 16,430, obviously falls in basic rate. Applicable tax rate is 20%. 3,286. Dividend income is 5,000, so obviously nil rate band is there, 1,000. Dividend income, nil rate band. Because every individual gets 1,000 nil rate band for this dividend income, irrespective of tax paying status. Out of 5, 1,000 we have taken in nil rate band, so the remaining dividend income obviously falls in basic rate. Dividend income, basic rate band rate is 8.75%. 350. I'm getting 3636. Income tax liability. So that's great. The students are getting now the same results. Income tax liability is 3636. Okay, students, if you recall previous classes as well as today's class, basically we have discussed how do we calculate income tax liability, non-saving, saving, and dividend income. We have already discussed when your personal allowance reduces, the rule of gross PPC, we have seen that. Plus, we know that if your registered net income is more than 1 lakh, then your personal allowance will reduce. Plus, if adjusted net income is 1,25,140 or more, then your personal allowance becomes zero. And we have discussed all the rules of saving income, when to utilize the starting rate band, nil rate band, and in case of additional rate for the saving, and if individual is an additional rate taxpayer, then for the saving income will not get any nil rate band. Now, student, today's class is very short, but tomorrow we'll have a class as well, inshallah. And from tomorrow, let me tell you the topic right now. Tomorrow we will start we will be doing the revision of property income. Is this clear? The topic of tomorrow. So inshallah, in tomorrow's class we'll be discussing property income, and then slowly and gradually we'll try to discuss more topic in our class. Today I'm just not feeling a little bit well, that's why. So inshallah we'll be having a class tomorrow as well, and the topic is property income. So thank you very much, students. See you all inshallah tomorrow as well.